Hi, good afternoon, and welcome to the 2020 Economic Recession and Preparation Channel. I'm your host, Tony. Thank you so much for joining me today on this Hump Day Wednesday, December 9th, 2020. Please hit that subscribe button and tell all your friends to continue to subscribe for the truth about economic news, not only in the U.S., but worldwide. And so I would greatly appreciate your support for our channel and the videos that we make. So today we're going to be talking about first the real estate market, and then we're going to go into one forecaster's economic outlook heading into the first quarter of 2021. Mortgage rates are set the 14th record low of the year, driving even more refinance demand, this according to CNBC.com. And Sallie Mae and Freddie Mae say that mortgage applications to refinance rose 2% last week from the previous week and were eye-popping 89% higher than a year ago. People are using their homes as an ATM, obviously, during this time, and they might as well. I can't blame them because we're in a time now where we're in a depression in this economy. It's just beginning. We haven't seen nothing yet. 2021 is going to see a bunch of new things come into the arena. Besides this sickness pandemic and other things that's going on, mortgage applications to purchase a home fell 5% for the week, but were a strong 22% higher annually. Mostly that is basically for those people who don't know. This is for people who are exiting the cities. A lot of people in New York City and high taxation places like New York City, California, Illinois, Illinois, and other places are moving out from the dense super metros and into the suburbs and hinterlands for a cheaper cost of living, so they can get more bang for their buck, so to speak, right now, while things are still before the hyperinflation hits. So we haven't gotten to that point yet, but we're on our way here. As the dollar, by the way, is taking a beating. It's below $94 on the index. It's been taking a beating it's lost 2% of its value the last 2 weeks, just by the way, for correlation here. So at this point, though, who would really want to get a mortgage in this hyper bubble that we're living in most markets, from Las Vegas market to LA to New York to Houston to Illinois to Phoenix? I mean, just everywhere it's in a bubble. San Francisco. A 30-year fixed mortgages, the rate's down to 2.90%. Okay. So they want this rate, they want you to fall into the trap, but everybody should know that the housing correction is coming. And that is coming toward the third and fourth quarter of next year. The 2021 basis is that what we're forecasting, what I'm forecasting for it to be, is that in the third and fourth quarter after the summertime is when you're going to see the housing prices and the correction happen, the drops happen. And that's when the hedge funds and the other people, the big investors, are going to take their money and buy up blocks of all these houses. So your houses are going to be underwater, those who do buy these houses, because we're in a huge bubble. The housing market is in a huge bubble. So, of course, they want people to get into these 30-year mortgages. And then all of a sudden, when the rates go up, interest rates are bound to go up eventually after the depression. You're going to be upside down. And so just watch out for that. It sounds good on paper, but when you look at it, the refinance is good for refinancing. But after the refinance, you're still left with a bunch of payments to make, and you end up never owning anything, never owning a real tangible asset. And that's just what the super top 1% want, you to not own any tangible real assets. So just something to think about there. And besides, the housing market has been overvalued these last, not just since 2008, but since 2001, really. But 2008 is when we had the big crash in 2008, 2009, and now it has been just on steroids. As a matter of fact, the whole commercial market is on steroids too. The only new things that they're building right now, as you know, is dollar stores, gas stations. I don't know if you've seen this in your neighborhood, but next time just go around, drive around, and look at what they're building. Only things they're building are dollar stores, gas stations, Aldi's supermarkets, I guess these kind of low value supermarkets, and they're building also, and the other fourth thing that they're building is multi condos, these stacked high rise condos. I guess they want everybody to give up their houses and move into these super stacked condos. Just like it's kind of ironic because that's what China has in Hong Kong. You go there, it's very dense. America's becoming that now, where they're moving everybody in these super high rise condos with 50 floors and apartment buildings where everybody's going to live in. That's going to become ghettos after 30 years. But this is what we're forced to. So we have to look out for that. Now, on MarketWatch.com, there was an interesting article about the top forecaster. She sees rough next 3 months and then a strong recovery as the beer bug fades. Okay, so she said the unusual rebound would be led by high-income families spending on travel, restaurants, and leisure. Newsflash: the top upper 1% of 1% of families in America are not spending on travel, restaurants, and leisure. Okay, they're sitting on their money. They're waiting for the deals. And number two, they don't have to do that because they already own private islands that they can get away to. They have years worth of food in underground bunkers. That is their leisure. Their leisure is keeping the money amongst themselves. So this is a totally fake news here. This is by Aneta Markowska. She's a Polish chief economist for Jefferies Inc. And she says that she won the Market Watch's Forecast of the Month contest for November. She's optimistic about a recovery in 2021 with GDP, that is gross domestic product, rising to 4.5%, and she sees a job growth of about 400,000 a month. Oh wow, this is almost laughable, ladies and gentlemen. We're losing over 700,000 jobs every week since the pandemic began, since March. We're 10 months into this pandemic, almost a year into this pandemic, and she's forecasting a job growth of 400,000 a month next year in 2021, which is only, 2.5 weeks away now? I don't think so. Somebody's smoking something. Somebody is doing something a little bit too much here. But this is what the media will have you believe. If you look behind the curtains, you will see that we have 40 million people unemployed. That's confirmed. The number may be even higher than that, but we're going by the Bureau of Labor Statistics number. Unemployment, they say, claim has fell down to 8%, but we don't know that either. We know that another stimulus package is coming. A $908 billion stimulus package has been proposed, but once again, that was shrunk from $2 trillion, and once again, this may not include a second round of stimulus checks if we get anything at all out of that. So once again, Main Street suffers, Wall Street is going to continue. And once again, we've been preaching this since last year that the stock market can go to 30,000, 40,000, which is going to do because of stimulus, but the main economy is going to be going down into a super depression. And this is the same thing that happened in Venezuela, Zimbabwe, Weimar Republic, Turkey, the Turkish lira. You look it up, Greece, Iceland, you name it. The same thing is going to happen to the United States, but it's going to be even worse because we have so much debt. We have so much people that are not used to living below a certain standard of living in America, and this is what's going to make things just horrible. And not to count just these vaccines. Everything has been saying, all the economists on TV have been saying, oh, yeah, we got 5 people making vaccines and all that. What they don't understand is that the vaccine companies have already gotten their $500 billion, okay? So they can afford to make a vaccine for free. They're not liable for what happens with the economy. They're not liable for what happens to me and you. So if you go and take the vaccine and you get paralyzed or whatever, they're not responsible for that. Just like the politicians, when they go print up all this money and we go into hyperinflation and the economy stagflates, they're not liable because they're already multimillionaires. They're already cashed out, you see? So it's this game that everybody's not liable. Congress is not liable. The vaccine company is not liable. And they have it all in writing. So that's why we have to be more self-sufficient. Learning skills, real skills that are going to help us to survive what is coming, because we know what's coming. It's already here. We're already in a depression. We're just masking it now because we have this beer bug thing going on right now and other things going on, which is real. I'm not saying it's not real, but I'm saying that it's masking the depression in the sense that people don't realize just how bad this thing is until they go take a look around their communities and they figure out that over 50% of the businesses are closed and those who are open are just barely hanging on because they're waiting for another PPP loan or a stimulus loan from the government. So continue to prepare, my friends. Be blessed. I will talk to you very soon. And thank you for listening to today's message.